Welcome to this special podcast, sponsored by Murphy Business Sales Edison, New Jersey office, where your business aspirations meet expert guidance. Whether you're looking to sell your business or explore new acquisition opportunities, we are here to support you every step of the way. Join us as our hosts deep dive into small business topics which are relevant for buyers, sellers, and other transaction advisors in the ecosystem.
You ever feel like the world of investing is just this incredibly complex, constantly shifting puzzle?
Oh, absolutely.
One minute it's all about growth, the next it's hyper-focus on stability.
Yeah.
Trying to keep up with what truly captures a serious investor's attention can feel like, well, chasing a moving target.
It really can.
Well, today I'm going to try and cut through some of that noise with a phenomenal deep dive into a recent McKinsey survey. And this isn't just speculation, you know. It's a direct window into the minds of 81 top-tier investors. We're talking people managing over $1 billion each.
Serious players.
Exactly. Revealing what they're prioritizing right now. Our main source here is this piece. McKinsey survey shows investors seek fundamentals and long-term vision. It came out August 2025, but it's based on a survey from in December 2024.
Right. So pretty current thinking.
Yeah, across Canada, Europe, the U.S., they asked these really influential investors what makes a winning company in, 2025. So our mission today is basically to unpack all this, pull out the essential nuggets, you know, what really drives their decisions, what's subtly shifted maybe, and what's always been core, foundational stuff.
Yeah.
We're hoping for some aha moments for you.
And what's really compelling, I think, about this survey is how it highlights these enduring principles of value creation, even with everything going on, right? The dynamic global landscape. It's not just what they're prioritizing, but digging into the why behind it, the strategic thinking, especially with all the external pressures.
So let's start with the bedrock then. The survey makes it super clear investors are consistently looking for stability. They're focusing on core value creation fundamentals.
Yeah.
But, you know, given the economic headwinds, the rapid tech shifts, is that a new emphasis? Or just kind of a reinforced truth for these, you know, sophisticated investors?
That's a great question, because it feels like both, doesn't it? It's definitely a reinforcement, but also a bit of a reweighting.
Okay.
So the underlying levers of value, they haven't fundamentally changed. But the survey does show this subtle, but I think significant shift in emphasis.
Like what?
Well, for instance, the 2023 survey really highlighted things like cost efficiency, capital productivity, product innovation, standard stuff.
Sure.
But this latest poll, the one from December 2024, it shows respondents leaning just a bit more toward headline profitability metrics, especially return on capital.
Ah, okay.
They want to see those fundamentals, those levers, translated directly into tangible financial outcomes.
Right.
Like right now.
Makes sense. Show me the money, basically.
Well, right much. And likewise, the focus is broadened a bit. It's not just about sustainable competitive advantage or superior margins or disciplined capital allocation anymore.
Right.
Now, investors seem to be looking at a more holistic picture, the company's overall financial performance and health.
So a wider lens.
Exactly. It's not some radical departure from what long-term investors always care about, but it probably reflects the current macroeconomic backdrop, you know, swinging sentiments, inflation worries, interest rate uncertainty.
All that noise.
Yeah. So they're demanding more comprehensive financial resilience, proof the company can weather storms.
Got it.
And it's probably worth a quick mention on methodology, too. This latest survey had 81 investors, mostly managing over $1 billion long-term view, at least 4 years.
Okay.
The prior one, back in 2022, was with 19 CIOs, chief investment officers. So while the questions might have differed slightly here and there, the directional shifts, they still feel highly informative, gives us a powerful sense of current priorities.
Okay, so we've talked about what's enduring, what's maybe being re-emphasized. But what about the really big shifts? What jumped out as unequivocally new this year?
Yeah, this is where it gets really interesting. And one of the most striking things, honestly, is the meteoric rise of AI.
Yeah.
Artificial intelligence.
Right, you hear it everywhere.
Exactly. And its utilization, how companies are using it. It never even came up as an important feature in the 2023 findings. Not once.
Really? Zero mention.
Zero mention is a key feature. Yet in this recent December 2024 survey, boom, a significant chunk, 31% of respondents cited AI and technology utilization as a defining characteristic of a winning company in 2025.
Wow. That's That's fast.
It's a rapid sea change.
Yeah.
Seriously. It shows how investors now view technology's direct impact on value creation. They see it as this transformative force that has to be part of a company's core strategy, not just a nice to have.
Okay, that is a huge leap in a very short time. Now, on the flip side, what about ESG? Environmental, social, governance factors. We heard so much about that. The survey shows a distinct downtick there. In the prior survey, 20% considered ESG a top driver of long-term value. Now, only 18% rated it fair or extremely important. What's going on there? A shift away from sustainable investing or something else.
Yeah, that's an important distinction, I think. It raises this question about how ESG is being integrated or maybe just perceived by these specific investors, right? These big players.
Okay.
And later in the survey, the picture gets even sharper. A whopping 82% of respondents indicated they do not consider ESG factors to be a very or extremely important factor in an investment's attractiveness.
82% don't see it as very or extremely important.
Exactly. Now, this isn't necessarily them rejecting responsible business practices outright.
Right.
It might be more of a reevaluation of its direct impact on investment appeal and, measurable financial returns, at least in the eyes of this specific group.
So maybe it's become table stakes? Or just embedded differently?
Could be. Maybe it's viewed as part of broader risk management now, rather than the standalone driver of why you'd find an investment attractive. A subtle but important shift in framing for this cohort.
Okay. So these priorities fundamentals, AI up, ESG may be framed differently. How do these investors actually assess a company? What data are they digging into?
Right. Well, unsurprisingly, granular performance data is key for credibility.
Yeah, you need the numbers.
But this survey helps pinpoint which numbers are paramount right now. They rely heavily on EBITDA.
Earnings before interest, taxes, depreciation, amortization.
The classic.
The classic operational profitability measure. That's followed closely by ROIC, return on invested capital.
Yeah.
How efficiently are they using their money? And then EBITDA margins. So those are the go-to metrics for current performance, confirming that operational strength.
And long-term.
Beyond just the current numbers, investors universally prioritize return, growth, and profitability. Those are the foundational pillars for evaluating long-term potential. They want assurance the strategy is built for sustained success.
But it's clearly not one size fits all, right? The survey mentioned tailoring metrics.
Oh, absolutely. And that's fascinating how they tailor them. For example, if you're investing in capital-heavy industries like industrial, they really dig into cash metrics. Free cash flow, things like that make sense.
Sure does. Financial industry investors, all about the balance sheet metrics. Capital ratios, stability.
Right.
And for software, SaaS companies, it's entirely focused on retention and churn statistics. Are customers sticking around?
That makes perfect sense. If you're SaaS, losing customers kills you.
Exactly right. I mean, think about it. For a SaaS company, knowing customers are sticking around, maybe even expanding your use, that's way more indicative of long-term health than just one high quarterly revenue number.
Yeah.
So it really underscores this need for bespoke communication. You can't just throw the same data sheet at everyone.
Like giving a steakhouse menu to a vegan, as you said?
Exactly. Companies need to understand what specific data points really resonate, really matter to investors in their particular sector.
Okay, so the data builds credibility. But the survey also emphasizes the broader equity story. That's what captures attention, inspires conviction.
Yes, this is crucial.
Investors want consistency across all communications, right? Tying everything back to the core narrative. It's about weaving those numbers into a compelling, consistent vision.
And here's a key insight on that. A majority of these respondents consider an unattractive equity story a highly significant factor working against an investment's appeal.
So a bad story can sink you, even with okay numbers.
It seems so. It really raises the question for companies, are you effectively articulating how you create value today? And critically, how you plan to grow profitably over time without that clear, compelling, and importantly, transparent narrative. Even with good numbers, you risk failing to inspire that conviction these investors need. So the difference between just showing data points and telling a truly believable story about future value.
Okay, let's shift gears slightly to direct interactions. Capital markets days, CMDs, how important are those?
Vital, apparently. Seen as really key points of contact. 56% rated them important, another 20% very important. That's over 3/4 finding them significant.
And what do they want from those CMDs?
Crucially, over 90% prefer a narrative that includes a long-term perspective, or at least both short and long-term views. They are definitely not just looking at the next quarter's results.
They want the big picture.
They want the big picture, the strategy. And connecting this back, it's clear they demand a unified message. Over 90% believe that companies' equity story needs to align perfectly across all investor communications.
All of them. CMDs, quarterly calls.
Everything. Any inconsistency, even subtle differences maybe between what the CEO says and the CFO implies, that can seriously undermine confidence. It creates this perception of a strategic incohesion. It's all about building trust through that single consistent voice.
Okay, and here's a finding that really jumped out at me. 21% of respondents identified elevator pitches as the most inefficiently communicated aspect that is most crucial to address.
Yeah.
1 in 5 said the elevator pitch is the biggest problem. That's a massive insight, isn't it?
Really is quite striking.
It suggests so many companies are failing at their most concise messaging. That quick, impactful summary. Why do you think that specific short-form communication is falling so short?
Well, my interpretation, is that in this age of just information overload, a truly effective elevator pitch isn't just about being brief.
Right.
It's about conveying a really powerful, unique value proposition and a sense of genuine leadership vision, like in seconds.
Mm-hmm.
And if a company can't nail that, can't succinctly articulate its core value, investors might start questioning if the leadership team truly understands their own strategic essence.
Like, if you can't explain it simply, do you really get it?
Exactly. They're looking for that clarity and conviction, not just a mumbled list of talking points. It really underscores how important it is to distill complex strategies into a sharp, memorable narrative, even for the shortest interactions.
Okay. What about quarterly calls? What matters most there?
So the material shared the slides, the data that's most important. Over 50% cited that. Then came the speakers themselves, over 20%.
Interesting.
But what's also interesting is what didn't rank as high for the investors themselves, distinct from analysts, maybe. One-on-one follow-ups were of, quote, limited interest.
Really? You'd think they'd want that direct access.
Well, they do want direct access, but maybe not in that format. What they do highly value is unscripted time with company decision makers.
Ah, Q&A.
Yes, and more participation from a broader range of company executives. This totally aligns with feedback from 2023, asking for more Q&A time, more execs involved.
So less polish, more real interaction.
Seems like it. They want authenticity. They want direct access to the people actually making the big decisions, not just a perfectly polished presentation. They want to hear leaders think on their feet, respond to tough questions, not just, read from a script.
That makes a lot of sense. Okay, stepping back from company specifics, the survey also touched on the wider anxieties, the macro concerns shaping decisions. What topped the list in late 2024?
Yeah, large numbers were citing geopolitical risks. That's a big one. Also, inflation and interest rates, still persistent worries, and government regulations and political risks.
So the big global uncertainties.
Exactly. And this was even before tariffs became maybe quite as front and center as they are now. So it shows this clear, persistent focus on the broader macro environment. These aren't just background noise for them. They're direct factors influencing how they perceive risk and opportunity everywhere.
And did AI come up in the macro view too?
It did. Reinforcing our earlier point, it's compelling how strongly investors predicted AI would be a key investment theme for 2025. They clearly see companies with a robust tech angle, a clear AI strategy, as just being more successful going forward.
So it's both a company-specific trait and a macro theme.
Absolutely. It underscores that rapid rise in importance and its perceived impact on future performance and competitive advantage. It's hidden on multiple levels.
And ESG on the macro level.
And just to reiterate that point again, the survey showed that 82% figure they did not consider ESG factors very or extremely important in an investment's attractiveness. Reflecting that subtle shift, or perhaps clarification, we discussed about its direct appeal as a primary driver for these specific investors.
Okay, so let's try and wrap this up. For companies listening, trying to attract and keep investors, what are the most crucial, actionable takeaways from this whole deep dive?
Okay, first, anchor your narratives firmly in the right financial metrics. Focus on the fundamentals, like ROIC for showing returns, EBITDA for growth.
Got it.
But then be ready to tailor those metrics. Dive deeper into what matters for your sector. Retention rates if you're software, maybe customer acquisition costs for consumer businesses. Know your audience.
Right. Tailor the data.
And your equity story, the narrative, It has to be crystal clear, supported by those tailored metrics, and this is critical, consistently communicated across every single investor interaction.
No deviations.
Any deviation, even small ones between calls or presentations, can just quickly erode that trust they're trying to build.
Absolutely. And what else?
And finally, that robust reporting, the numbers. It needs to be paired with meaningful and, importantly, unscripted interactions.
The Q&A again.
Exactly. Open Q&A sessions are crucial for that transparent exchange for fostering trust. Capital markets days need to clearly articulate the long-term strategies, helping investors really grasp the company's trajectory and vision. It's all about building trust and maintaining confidence through genuine engagement, especially when things are changing or during periods of transformation and uncertainty.
So you've heard it, everyone. While the investing landscape definitely shifts, with macro concerns, new technologies like AI bubbling up, the core message from these top investors, it remains strikingly clear. They want stability, they want a long-term vision, they want tangible financial outcomes, and they want a clear, consistent, data-backed equity story delivered through authentic interactions.
Yeah, and this deep dive, it isn't just for companies, right? It's really for anyone trying to understand the pulse of the market.
Sure.
Knowing what these influential investors prioritize helps you, the listener, critically evaluate Nude, understand company strategies better, maybe even inform your own financial decisions or, your career path in business.
Yeah.
It offers a really clear lens into what's driving value in today's economy.
Okay, so here's a final thought to maybe mull over. If investors are increasingly seeking these unscripted interactions, right? More Q&A, more execs involved, partly because things like elevator pitches are seen as insufficiently communicated.
Yeah.
Does this suggest maybe a growing skepticism towards those really polished, maybe overly managed corporate narratives, and instead a real hunger for raw, authentic insight into leadership's true vision, their ability to think on their feet?
That's interesting. A hunger for authenticity.
Yeah. And if so, what does that mean for how companies will need to engage going forward, maybe pushing past the standard talking points to really, truly connect? Something to think about.
Definitely something to think about.
Thank you for joining us on this deep dive today. We hope you feel a little more well-informed, maybe a bit more ready to tackle the complexities of the investment world.
Hope it was useful.
We'll be back soon with another deep dive.
Thank you from all of us at Murphy Business Sales for taking the time to learn about this important topic. We look forward to working together to achieve your business aspirations. For more information or a complimentary consultation for sell-side services, visit us at murphybusiness.com/Edison and complete our Contact Us form.